As a new investor, ETFs are one of the safest methods for someone who just wants to buy and let their money grow for the long term. In fact, many of the major ETFs were able to outperform the S&P for 2021. I'm Jay Jones and this is Jonesy for Stocks, and in this video, I'll be explaining what ETFs are, the advantages of ETFs, and some of my recommendations for 2022. To briefly explain what an ETF is that it's an individual security that tracks an overall market or sector. In other words, it's an individual stock that's made up of multiple stocks that tracks a broader sector. A major advantage to this is having one stock that is already made up of multiple stocks to minimize your risk in the market. This method averages safer returns, so you can see how ETFs have an advantage for investors that just want to buy and hold for the long term with a minimized risk. Some things to know is that an index fund is different than an ETF. An index fund is created by an individual broker, for example Vanguard, while an ETF is traded on most exchanges. An index fund may have a minimum deposit depending on your broker, while an ETF is traded on exchanges that have fractional shares, so there might not be a minimum balance required. Another difference is that the way that they're purchased. Index funds through their brokers have a set time, while ETFs can be traded throughout the day. However, they have multiple things in common. For example, each fund has a set purpose, whether it to be track an individual sector or the broad market. And both index funds and ETFs have an expense ratio, which is the cost of having the fund managed by an individual broker. But with both, you can research the holdings to see what actually makes up both funds. Now, ETFs might seem like the boring option compared to the individual stocks that AMC and GameStop had in 2021, but it's unreasonable to expect those kinds of returns for the long term without a high amount of risk. But historically, investing your money in a solid index fund or ETF has been the greater, safer option. It's even the recommended method by Warren Buffett. While owning a little bit of everything minimizes your overall risk in the market while still getting the returns. Now, past performance doesn't equate to future profit, but looking back on the numbers, the returns don't lie. And these are the top ETFs that I believe will be safe throughout 2022. The first being the S&P 500 ETF, ticker symbol SPY. This ETF is exactly what it sounds like. It's made up of the largest 500 companies that are listed on the stock exchange in America. And the SPY has been the most traded ETF with plenty of liquidity for trading. The SPY is also one of the oldest ETFs, created in 1993. And in the past 10 years, it's averaged an annualized return of 14.7% with an expense ratio of 0.09%. And its largest holdings include companies like Apple, Microsoft, Google, and Amazon. The second ETF will be the Invesco QQQ Trust, ticker symbol QQQ. Just like how the SPY tracks the S&P 500 companies, this one tracks the largest 100 companies in the NASDAQ. This ETF is the highest rated ETF in the past 10 years and is the second most traded behind SPY. In the past 10 years, it's annualized an average return of 22.5% with a higher expense ratio of 0.2%. But the holdings of this ETF are heavy rated tech, with over 50% of the holdings of the ETF being in the top 10 tech companies. Another ETF will be the Vanguard Total Market ETF, ticker symbol VTI. Created by Vanguard, this ETF is made up of small to large cap companies, so it has a broader range of diversity than the last ETFs. In the past 10 years, it's had an annualized return of 15.9%, with a low expense ratio of 0.03%. This ETF has a massive diversity with over 4,000 companies, and unlike the other ETFs, technology only makes up 30% of the fund. Another safe ETF is the Schwab US Dividend ETF. This ETF is perfect if you want a safe return while also earning a dividend on your investments. This ETF has a quarterly payout to its shareholders just for holding this in your portfolio. You can choose to receive this dividend as income or just reinvest it using the dividend reinvestment program. And each of the companies within the ETF are companies that pay out dividends to its investors. Currently, this ETF receives a dividend yield of 3.1%, and since it was created, it's received an annualized return of 15%, with a low expense ratio of 0.06%. The holdings of this ETF are only 105 companies with no REITs. With the uncertainty of 2022, it'd be wise to have a diverse portfolio as the increase in inflation is still unknown, which I talk about in one of my videos, and I also outline some of the value stocks that may be least affected by inflation. And if you got any value from this video, don't forget to like and subscribe so I can continue making content just like this.